I would love to buy a deal from you because think about it. It's a fully renovated property, rock solid. Whether you have good notes or not, my due diligence would show me that. And I know the value is I don't have to spend any money here.
Mhm.
All I got to do is raise rents, right? And if the market's now at 1,300 and you're at 1,150 or 1,200, that's a very easy thing for me to understand. Is when I walk into 10 properties and I say, okay, 1,300, 1,280, 1,325. You walk into all those properties and you say, wow, look at this. I don't have to do anything.
This is the real estate investing experience. We get it. Real estate can be rough sometimes, and that's why we bring in the experts to talk about the experiences you won't hear anywhere else with your hosts, John Cohen and Chris Grinzik.
What's going on, guys? Welcome back to another episode of the Real Estate Investing Experience. I'm your host, Chris Grinzik, and with me, as always, is John Cohen. How's it going, bud?
We're doing good. We the pleasant surprise of not having a guest on this episode, and it's just gonna be, us shooting shit and figuring it out. And I think hopefully we get some good stuff out there and some good takes, and people like it.
Yeah, for sure. No, I like throwing these in randomly, doing it here and there, and we had the fortunate or unfortunate pleasure of a couple cancellations, so it gave us the opportunity to hop on and do this. So if you're listening and you like the podcast because of all the guests and not because of us, you probably want to turn this one off. If for some reason you like us instead of the guest, then this is the one for you. But excited to do it. We're just talking a little bit offline about honestly what to talk about. And I don't know, we just kind of always figure it out. But just really quickly, we were just talking about the other episode. What was his name that we had on talking about retail? Was it Aaron?
Yes.
Zucker? Yeah, because it was Zig. Because that's my last name, kind of. But it was just, we were just talking about, apartments and retail and stuff like that. And I was just talking with somebody in my office, and he does some retail as well as apartments and just kind of, what they're looking at doing. So I don't know. It's just an interesting space right now, right? If everybody is going one direction, can you go in the opposite direction and maybe make something work? And I was just talking about, instead of maybe looking at apartments in all of Jacksonville, maybe focusing more of like just one submarket and kind of diversifying out. So I don't know, it's an interesting kind of debate of how to start, especially for me, right? Because I'm so small now and kind of just figure it out as I go. But it's kind of, tough and scary to kind of switch asset classes, except, especially something with, so many different factors, right? It's not like going from apartments to mobile home parks or apartments to student housing or apartments to Airbnb. Yeah, it's totally different. So
I think there's something to be said about being the best at what you do and doing it better than everybody else. But there's also something to be said about in today's world, and I shit on it all the time, technology allows you to do a lot more than you ever were able to, right? And whether you know how to use a computer or you don't, you have so many resources at your fingertip that you never did. And I think the opportunities that lie in front of us are not buying deals from professional groups or buying deals from super sophisticated investors. The opportunities that are in front of us are smaller landlords, tired landlords, older landlords, out-of-state landlords, and landlord being the blanket, single family, multifamily. That's where you're going to see opportunity. Now, it doesn't mean that guy can't pick up the phone, call a broker, and get top dollar. But there is something to be said about a guy that owns the one-off retail shop around the corner from some vacant stuff. And maybe he's done, right? The pandemic set him in. He didn't have good guarantees. He didn't have good leases in place, and vice versa. So I do think the opportunity doesn't lie in product type. I think it lies in sellers. And one thing that we did at Toro, and I was talking to Don about this last week, I said, 27 deals. Look at the deals that were very successful. Look at the deals that were successful. And look at the deals that, we probably could have done better. And, okay, there's not a lot of those. And look at the profile of the sellers. Look at your acquisition price per door. Look at what you did on the properties, right? And we were looking at it. The deal that was marketed, we bought, we sold, we executed our business plan, are always less than the deals that we've bought through management contacts, through off-market listings where a broker was still involved, but it was not a package that went out there. You know, tough sellers, out of state. So I broke it down and I looked at it and I was like, okay, we do $7 to $20 million deals really good. Deals 20 million north are okay. The deals sub 7 million, really good, harder to find for us because they're typically a little bit smaller. So I think
that might be changing now.
Definitely changing now. Same thing. If I looked at a retail property, do I want to buy from, you know, a top 10 retail landlord? No, that guy knows what he's doing. I'm not going to add any value there. But if I can take my expertise of broken and fix it and then step back, right? You know, you did a fantastic job for us, right? Good deals, good underwriting, good management, good dialogue, good conversation. You know, the multifamily world. You didn't step out of Toro and buy a 250 unit property for 30 million bucks. You went out and bought a 16 unit deal for $1 million and change, whatever it was. But look at the 16 unit deal compared to some of the stuff you underwrote and worked on, right? Now take that same philosophy and say, okay, I'm going to go find $1 million retail deal that's broken and look who the landlord is. And I think that's where success lies, you know, sort of like, you know, when I was messing around with the land stuff and messing around with the mobile home stuff. And, you know, even now I'm always trying to think, you know, what can I do a little bit different? Luckily, we're in a position where we own some assets and we do have some cash flow and we are going to strategically sell some properties. I don't have to buy anything, right? I can sit back and let this market play itself out. Maybe I missed the best opportunity in the world. But at the same time, I can use this time and strategically plan, okay, this is the landlord we bought from. Let's take that landlord, carbon copy it to retail and find it. I was looking at triple net leases the other day and say, okay, well, if I sell this deal and it's a double, right? Turn $1 million into $2 million, would I go buy a 6 cap triple net lease? You know, that's good cash flow, no headache. Who's the tenant? So now I think you have to understand where you play in that retail and that triple net, and you have to understand the dynamics there. But I don't think it's as hard as it historically been. Now, I don't think you also want to be a jack of all trades, but I think if you know a location and you know what you do really well, if you extrapolate that information and put it on place, I think you can put a pretty game plan together. You know, target single family, target retail, target vacant industrial, right? I don't know what it is. I think if you find out what you do well and pull it out and apply it to another market, I think you could do well, right? Because there's a ton of competition. But we'd be foolish looking at each other right now and anyone listening. If you think you're going to go flip the page and go into retail and there's not going to be competition, you're crazy. No matter what you go into, you're going to fight tooth and nail with the next best guy. All you have to be is a little bit better or know something that someone doesn't. And if you pick location and you can get into planning and zoning and understanding, you know, the rules and the acreage and the setbacks, if you can understand that stuff in a physical location, you're a weapon because you're going to know more than the group that's just randomly firing off offers and buying some. Because if you know you have 3,000 square foot building, but the setback is, you know, you could build another, you know, end cap type real estate with a drive through like Aaron was talking about, you're dangerous, right? Because now you have your value add is, you know, something that other people don't. People are going to pay us, you know, 6 million for that or 600,000. You know, you could pay 850 because you got a product that doesn't exist in the marketplace. And if you add it, tremendous value. And I think that's where understanding location is more important than product.
Yeah. And I think, you know, you touched on a good point, right? I was just making sure that was Aaron. Before we just say, I knew it was Zucker, but because we had another Aaron on, I was just making sure. But I think you touched on a good point, right? It's like, okay, you know, and we've done this, right? You start going down a path and you learn about something because it sounds great from the outside in, right? Everything's easy from the outside in. And that's where we were even talking about the Airbnb arbitrage. I said there was someone I met that got their, you know, face handed to him basically during COVID. And it was something that, you know, we had discussed a lot going into it. They just happened to be in an urban area where they got crushed. And there's people that did it in more, you know, suburban rural areas that have done very well. So I think it's one of those things where, you know, there's nothing wrong going down the path, but then you start to look at, okay, what's the time it takes to get dangerous in this space, and is the opportunity worth it? You know, for right or for wrong, one of the reasons I'm sitting here and I probably won't ever look at mobile home parks I just don't think there's enough inventory by the time I'm going to get into it that it makes sense. What is it like? There's like 50,000 parks across the country, right? Is that the number?
Yeah, it's like 44,000, but
So it's like I try to, I do the rough math, and it's like, okay, so 22 and a half the country, 11 in a quarter of the country, and I'm in one little market, not even in a quarter. I'm like, how many parks are there realistically going to be in my area? Everyone says, oh, 80% mom and pop owned. Well, it's like, okay, people have been saying that for a few years. So it's not 80% anymore. Maybe it's 70, maybe it's 60. And then it's like, okay, how many of those are in areas I don't really want to manage in because they're just beaten down areas? So I start looking at it, I'm like, okay, by the time I can get up to snuff and be dirty to scale, that number of mom and pop owned is just going to keep coming down and down and down and down. And like, for me, I just feel like I'm too late to the party that I would be capped so much. Right. And then again, it's great that they're not adding a lot of new parks and lots and homes and stuff, and it's difficult for barriers to entry. But from the standpoint of, hey, I want to scale in the future, well, that's actually a bad thing, right? Because now as more competition comes in, it's not like there's added supply. It's very tough. So as more and more competition gets in, everything just gets tighter. So I almost look at it and I'm like, okay, could I probably find some good deals and, make good money and do stuff? Yeah. But if you want to really scale and build it up, I'm like, I'm almost too late to the party by the time I could get going. And all right, yeah, if I focus literally all my time and effort today on just mobile home parks, I could probably do it. But I've got a bunch of other stuff I'm trying to do. It would just be too much to my plate now that it would never make sense.
So I think that is extremely wise, because there's two things. There are two things that are extremely important that you just said that people don't hear. One, listen, I own a 7-lot mobile home park. I bought it for, it was like $62,000, right? I bought it with a buddy of mine 5 years ago, 2017. And we bought it for nothing, right? It was like $4,000 down, and seller financing. The deal literally makes $15,000 a year. So we've got our money back 6 times over, and we're listing it at $150,000. Probably come out later this month. And you look at that and you say, you right now can probably go buy that park tomorrow with money that you have, no headache, no nothing. Question is, how much do you want to work on that park, right? So it comes down to what you said, understanding that if I want to scale it, do I want to buy 107-lot parks? The management would be a debacle. And then the next part of it is, what we always talk about, working backwards. What do you really want to achieve in financially, right? You want to make $100,000 a year, $5 million a year, $20 million a year. You got to buy a shit ton of 7-lot mobile home parks. So when you take the 50,000 park number, you could probably take 30% off the top that are sub 20 lots, right? So what is the number, that 80% number on mom and pop? It ain't on the 200 units on the coast that, Warren Buffett owns in a REIT. That's not what you're playing with. You're playing with these little one-off things. So, understanding that's the exact same thing I felt on self-storage, right? Listen, I thought self-storage was an amazing product, in 2014, when I was going into multifamily. If I didn't work in Marcus and Millichap doing multifamily investment sales, I was probably going to pick self-storage. Maybe I should have, right? Maybe I shouldn't have. But today I hear new groups coming in, and we had an amazing guest on our podcast that's crushing self-storage.
Right.
But I feel the same way. If I look at that now, so if I started to play in that space today, where am I in the you're never going to time the market perfectly where you're on this surfer laying on the board and the waves right behind you, right? You're always going to be somewhere on it. Maybe self-storage is really in its infancy. I don't think it is, but that's how I feel about self-storage. It's the same way you feel about mobile home parks. It's, man, I missed it, right? Yeah. I'm not even going to educate myself on it because I missed it. And additionally, if I did want to educate myself on it, I could, but I feel like there's other products that I can spend more time on and learn that I could be more, I could do better at. So I feel the same way with self-storage. Not that it's a bad product. I think it's a great product. People are making, I get these emails all the time. I'm like, shit, right? Could have bought that. But I feel the same way, right? It's all mom and pop. It's so easy. There's no management. That's not necessarily true, right? That might be true on the one-off C-class deal off the beaten path that you buy at a 20 cap. You're not buying out at a 20 cap because it's a 3-cap product, right? You're buying it at a 20 cap because there's something wrong, right?
Mhm.
That's typically how this stuff works. So,
Yeah. Well, it's funny you mentioned self-storage. I've probably mentioned it before, but I'll mention it again. When I was moving down to Jacksonville, I pulled county lists for a bunch of things. And like my vision for the first year or two was I was going to come down, still target small multifamily. I was going to try to do driving for dollars wholesaling and learn about self-storage. I quickly canceled self-storage because I pulled a list. There's like 100 self-storage facilities in Jacksonville, like all of Jacksonville. And I was like, okay, probably like a third or half of those, I just have no shot of buying, right? They're either owned by like, like U-Haul or one of the bigger companies. They're too small, too big, wrong location, whatever, right? Just throw half of it. New construction, right? Like just probably half. Then I said, I got introduced to like two groups that owned several of these things in the area. So I was like, I said, there's 50 left. There's another, 10 to 20 gone. I was like, so there's literally like 20 to 30 left. I was like, that's such a low amount of supply. I was like, even if you bought, you can't even factor in like you're going to buy 10% or 20%. Like, what's the chances, right? Like you're sitting there thinking, okay, if there's 30 I can buy, even if it was 50 I can buy. And of two other groups that have a couple of these things in the area or few, you're sitting there thinking, how am I going to compete against that group unless I'm just willing to pay more or make less, which very well may be the case, right? They may be looking for astronomical returns, right? Maybe they want to make their money back in a year. Who knows, right? But I look at that and say, okay, it's just not even worth the time because of the probability or the likelihood of it even working out. So I like scrapped it really quick. And then you hear about, people like Ryan who are buying in literally every market in the country, basically, because there is just, it's stuff you can do from afar. So it's like, okay, I'm not even competing against the people here. I'm competing against people elsewhere. And I was just like, nah, it's not going to work. So it's funny you bring that up because I quickly scrapped that.
Yeah, no, it's crazy when you think about it. But I think all you can do, especially as entrepreneurs and in the real estate world, I had a call earlier with Megan, who's basically spearheading the entire acquisition of the mobile home service, right? She's cold calling, and she had a conversation, literally at 3:00 today, basically saying, it's broken, right? There's something broken. Like I'm making 500 calls a week and I cannot find anything. And now, partially, she may be doing a great job or a poor job, and I know she's making the calls. That's for sure because I see them, I listen to them, I hear them, and we just had a whole call. Like, how can we do this better? Like, how can we allocate the resources that we're allocating in a better way, right? Whether it's more direct mail, whether it's more cold calling, whether it's more cold callers, and I don't know the answer, and we're going to brainstorm a couple of ideas here because the deals that we're seeing and that are coming to us are priced at such crazy numbers that all you can do is put your offer in and then you make your money by tracking it, right? So take that self-storage, if there are 20 that you can possibly buy, all you can do is offer and have the best follow-up game in town. And that's how you will inevitably buy one of them. But if you buy one deal every 3 months, you could generate a decent return and a good living and cash flow and all that. But if it takes you 12 months to buy a deal, well, you better have a lot of money saved before you transact. So, I hear all these groups out there, we're trying to buy a deal a quarter and we're on pace to buy 3 deals at the end of the. I'm like, how can you possibly track that metric without overpaying, right? Like I'm going to buy 2 deals this quarter and then I'm on track to buy 4 at the end of the quarter. It's, all you can do is put the leads out there and put the feelers out there, whether it's direct mail, call, brokers, blah, 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 blah. But how do you project what you're going to buy? I know you could project
when the volume's that low, right? When you're like, if you're doing
low,
like flips or wholesale, I feel like it's a little bit easier because your volume is going to be most likely more. So much higher.
Exactly.
Yeah. But when you're buying like 1 a quarter, it's like, if you're buying 1% of all the deals you see, well, it could just be that one deal doesn't fall in this quarter. It could be it falls next quarter. So it's like, you fit that, that wrong peg in the, in the hole you're trying to fill, or do you wait? I think, Warren Buffett talks about it's like being at bat and you wait for your pitch. Sometimes, you got to strike out 7 times before you get the 3 hits. You still net your 300, but sometimes you can't pick, right? It can't be, I'm going to, if you were going to bat 500 for easy math, which I understand is ridiculous. So I'm just saying, you can't say I'm going to hit every other one. On average, yes, you will, but you might have to wait 5 in order to get the 5 you're looking for.
Exactly. And that's where, like, I've been direct mailing a lot to land, right? It's calculated. I know if I send out X thousand offers, I'm going to buy a deal. But the pool that you're playing with is so much greater than, as you get more specific and more niche and more criteria based, you're cutting out inventory, right? And inevitably there's less. So you either have to go play the long game or you overpay to play. But it just depends on your capital and what you're looking to achieve. Because I agree, right? I sit here, what's next? Not that we're switching from multifamily or getting out of multifamily. No, I am so bullish on it. I love it. I wish I can pull a lever and just buy deals at 4 caps. But we had a conversation with a broker today on a deal we're looking to sell, and he said, this is the market, right? Like, sellers are paying, buyers are paying the doc prep fees and the transfer taxes, and there's like, that's just the cost of doing business if you want to play in this market. And I don't care about doc prep fees and closing costs. I care about 3.4 cap tax adjusted versus 4 cap tax adjusted, right? Like, I can understand the value add that are out there, but brokers are selling population growth, job growth. That's the lifeblood of the business. But there's also, this is still a 1970s built deal that's going to cost, it's not costing $4,000 a door to renovate, right? You're spending 12. So that delta is what's throwing me off, being operating experience for 7 years, 8 years at this point, understanding that these deals cost money to run, that, it's like my wife sends me a single family house, and then you could look at it, you're like, okay, this is a fix and flip. I have no problem with buying a fix and flip, except for the fact who did it. If it was built by the wrong person, I'm going to have massive problems in the future. Whereas if I just buy the shitty property and do it for myself, I know what I did, right? I know where the plumbing is. I know what I replaced it. I can easily schedule and say, okay, I might pay a premium and then fix it. My renovation might be at a premium, but I don't have to replace the roof in 6 years. I don't have to replace the boiler in 4 years, right? I have my lifespan, so I can better understand the future. You buy a 1970s product from a group that bought it 2 years ago, did they do everything the way they should have to protect for the future? And you have no idea. So it's very difficult when you're up against that. And that's in any product, that you buy, right? There are people that are just assuming less risk and trying to be out of deals quicker. And when you have investor dollars, and the way I personally feel, that's not a risk that I'm willing to take. I'm not willing to put extra mezzanine debt on something to juice the returns. I'm not willing to put $5,000 a door, even though it could cost $7,000 a door. Like, I just can't do that. So you got to be a little bit different, right? You got to try and create more deals to look at to find the one that fits your model. And when you're playing in the space of a finite inventory, inevitably your percentages are going to be lower. But at the end of the day, you got to remember, you don't have to do 30 deals. You have to do one really good one. And that's the principle that we're going to live by.
Yeah, it reminds me of, what you were saying, this deal that's just been on the market. It's like 30 something units, and it's just traded hands twice in the last 6 years or something. And it's not even like the craziest pricing in the world, but because some of the renovations were just done in a manner that I wouldn't have done them on, like the interiors, like I'm just not crazy about the cabinets, not crazy about the layout. Like, some of them have a couple different types of tile on the floor. I'm like, you almost really got to look and be like, he spent all this money, but it's just not good enough, and you've almost got to redo it. And it's like I sit there and I'm like, or am I just overthinking it? And right, like, okay, it doesn't have to be the nicest looking apartment in the world, as long as it's clean and functional and kind of looks somewhat good, and you're just okay, yeah, you're just going to get the person that doesn't care about it enough. Or is it like, that shit really does matter, and maybe the property has higher turnover, or maybe that's why the rents are below market, right? Like, you really got to come in and redo all this work that they've done, because they're selling it as it's not a huge, value add deal. I mean, not all the units were done, so you'd still have to spend money, but I look at the handful of units that were done and I'm almost like, fuck, like, I almost wish they wouldn't have done it. Right. Like I almost would, rather just rip this stuff out and redo it, because it's just not great. And you look at some of that stuff, sometimes you're like, oh, fuck, like, you kind of, like, I'm not, I don't think I'll buy the deal, but I'm sitting there like, is this something that you can just get away with? And, maybe you do the rest of them and you come back to it in 3 years when all the other ones are done or something like that. So I don't know. It's always a weird thing. And, like you said, when you're buying a 1970s built, property, it's impossible to look at every little thing when you're doing DD. I mean, you're in and out of units, 5 minutes, right? It's like, it's so tough to figure out all the little things that are going on, especially if you've got units that are in various stages of renovation, or if it's been owned by a couple people. It's like, the owner that has it now isn't really going to be able to tell you what the old owner did. And even if the old owner did the best things in the world, if the one you're buying from sucks or is really poor record keeping, you're never going to get that information. So it's like, when it trades hands quickly, it's so tough, like, to follow that, that ownership schedule. Basically, like, okay, this guy did this and this guy did that. And then you're relying on the broker to actually, tell you the truth, or the owner to tell the broker the truth, and the old owner to tell the new owner that, the truth. It's like, you never know until you actually own the thing for a while. And then even still, you could own it for, a couple of years, and then something pops up and you're like, oh, didn't know that. It's just freaking wild.
Yeah, no, and that's the nature you live in, right? It's easy to be a deal killer, but how can you be a deal maker, right? And that's separates the men from the boys. But at the end of the day, and I say this loosely, but you could almost buy anything at any price if you're a really good operator, right? If you can really run a tight ship, if you really know how to operate a deal to a degree, right? You can't pay 20 million for a deal that's worth 3, but that's the difference between buying a 4.5 cap and a 4 cap, and the 4 cap working. It's because operationally it's rock solid. You know that $7,000 a door over improves it, but you're okay with that because you're going to retain tenants long term. You're not going to have repairs and maintenance fixes. So like, that's where an intimate understanding of the market may be like, okay, these rents are low. I'm not going to raise them all the way to where they could be, but I'm going to spend the money to make it as nice as I can. But I'm going to keep the rents a little lower for all those other reasons. It's going to suck today, maybe tomorrow, and maybe for 12 or 24 months, because I'll be making 4, 5, 6%. But then after that 18-month hurdle, when your retention's there and your tenants aren't leaving and there's no maintenance calls, your tail end's going to look phenomenal. And conceptually, that makes sense. At the end of the day, you got to look in the mirror and be able to operate a deal. And when you have third-party management, you either have to have a ton of trust, or you have to have your systems and your checks and balances in place. And that's where, like, someone like yourself in the trenches on a day-to-day basis, you're going to be able to sharpen the pencil on a deal because you're there, right? Where I just say, this is where I can go and I cannot break this because I need to leave a little uh-oh in there. Mm-hmm. You can leave a little uh-oh, but you know that, well, worst case scenario, I don't have to go find a plumber, right? I can do this. I can fix this in the worst case scenario. So I think operations and using that, that's where you're going to be able to sharpen the pencil. But throwing a pref on it and trying to pull other levels, I don't think that's the fix. I think the fix is in the operations, and whether that's retail, mobile home, whatever you're doing, if you're a good operator, you can figure out the downfalls that operators just don't know.
Mm-hmm. Yeah, no, I think it's, I think you're right to a certain degree. I think, there's only so much you can do at the end of the day, right? Like I'd never considered this, but real estate is somewhat limited in a certain capacity, right? Because it's only your physical apartment. You can renovate it as nice as you want. There's still a ceiling on what you can charge, right? So it's not like a lot of businesses where, you could go, I mean, every business at the end of the day has a ceiling, I think, but like you can add on different things, but a piece of property can only bring in so much income. And at the end of the day, you can only run it so lean until it starts affecting your income. So like there's an optimal, income and expense ratio, let's say, or, dollar amount that you could theoretically run it at, but like you're capped, So like you can operate it leaner if you're more efficient or local or hands-on or whatever, but to only so much, right? Because at the end of the day, even if you could run it for nothing, you're still going to have to pay taxes. You're probably still going to have to pay insurance. You're still going to have to pay utilities, right? Like you can't get rid of that stuff unless you change to solar or self-sufficient, but even still, like that's crazy. You know what I'm saying? And, you can't charge, an apartment $2,000 in $1,000 submarket. Maybe you get 1,100 because you're the best property manager and people know you by reputation and they want to live there for 15 years because you're like literally the world's best manager. All right. They'll pay 10, 20% more, but they're not going to pay double. Right? No. Nothing's worth that. Right. So it's like, again, you're capped. So yes, but only to a certain degree. And then it's like, you got to back into what you want, right? Do you really want to be fixing plumbing or do you want to pay somebody $200 to go fix that pipe? I'm sure shit fixing, I'm paying the $200, I'm fixing it. So.
Yeah, no, I agree with that 100%. Like that's my biggest argument today, right? People want to talk about inflation and hyperinflation and all that shit. I look at it as more like stagflation. I don't think people are making more money today. And I don't think if the cost of eggs go to $18, you're not going to be making $100,000 to afford them. That's the fucking root of all evil. And the way I look at it is you're not going to operate a deal and keep the expenses down because you're fixing the plumbing, because you're going to sacrifice something else, right? Enjoying your time, stuff like that. I think the biggest income killer is your repairs and maintenance, your vacancy, and your turns. And that's where over improvement, you may be able to retain better if you're a good manager. If you're a good operator, you'll retain. But at the end of the day, you're 100% right. The one thing that is unavoidable, and I don't care what anyone out there wants to tell me, inflation and things are going up and up and up and up and up. I don't care what anyone says. If the average rent in the market is $850, you are never going to get $1,800. So your deal's not going to work. You're 100% right. These properties have ceilings. This is not a sales position where you can just go out and just sell. You're not selling pencils or water bottles, and you could always do more from sales, right? More generating leads. This is not a sales business. You are in a people living business. So if the market rent is $1,000, yeah, you might be able to get 1,200 because you're great, but you can't buy a deal where it requires 2,000, even with inflation and all of that stuff. And I know people want to be in hard assets, and I get that, right? But the people that are talking about this, they're not economists, right? Most of them probably have bachelor degrees in fucking home economics or some shit like that, right? They're reiterating what they hear on the news, and I do the same thing. At the end of the day, Chris Grenzig, you heard it here. These things have ceilings, and I agree with that. And that's my argument. You can't look at a pro forma and say 6% rent growth for the next 10 years. Oh, okay, fine. But, there's a give and a take. And,
because what it is right, like, think about it. We're, when you're buying real estate, you're basically in mergers and acquisitions. Nobody talks about it, but you're buying a business, right? You buy a local, sandwich shop. You can, in theory, improve the sandwich shop by bringing in more clients. And even if they're totally maximized, well, you could do online or you could sell merchant, right? Like there's a lot of other ways to bring in ancillary income or increase the client base. Here, your product is the space. And it's like, there's only so many customers you can fit in the goddamn door unless you're going to totally change the business, right? Unless you're going to go to Airbnb or hospitality, or you're going to rent out, the lawn for whatever, you're going to rent out the pool or the clubhouse, right? You can do little things like that, right? I'm not saying, but the physical apartments, there's only so much you can do, right? And you're not going to turn a 200 unit multifamily into 200 Airbnb units, or you're not going to do it, rent by the bedroom, or, unless you're going to convert it to student housing. And then even then, there's only so much you can put into it. Again, you're still capped. And I understand every business to a certain degree is capped, but it's just, in my opinion, just way more finite. It's not,
absolutely.
It just is what it is. And I think, trying to squeeze all the lemon out of it. But it's interesting you brought up kind of what you're saying about the turnover in R&M. Like that was the whole thesis behind the first deal I did. It was renovate everything in the first year, refinance, bring it all up to market, like do a lot of that stuff really nice. Like we're replacing all the supply lines, doing all new cabinets, granite, flooring, to lower all the maintenance. And then like the goal is not to push rent crazy high, because like if you can keep occupancy high, if you can keep turnover low, like, 5% vacancy on $1,000 average rent is $50. So it's like, okay, do you keep the rent lower and say the $50 plus the $500 to $1,000 to turn? Plus the possibility of having a new tenant go in that isn't going to pay. If you've got somebody that's paying, it's, you can afford to increase it less to keep all those expenses lower. And alternatively, what I said too was, it also keeps that cap rate compression down, because over time, let's say the market grows at 3% and you only push 1% or 2%, that delta will continue to increase. Well, someone will pay a lower cap rate for that in the future. So if I'm only growing it at 3%, and let's say inflation goes up 5%, right, and I keep it low, well, I can keep my cap rate a lot lower than what the market will be. So it just helps preserve that value as well. Now, yeah, if you were to push the rent more and, you just kind of go with cap rates and probably would net more in the future, but, then you just bring on more work of, R&M and turnover and vacancy and stuff like that.
So and one of the reasons why, if I divulge too much information, tell me, is it a syndicated deal, right? I'll do it in the form of a question. Is it a syndicated deal? No. It's when you go in with the prop. Now, it could be a syndicated deal with 3, 4, 5, 30 investors, but if you educate your group on what you're looking to accomplish, there is something to be said about that mentality. And I think that mentality is, I can't break it, right? I can never poke a hole in what you're doing, because over improvement or not, over improvement to a quality, over improvement to a great quality at a rent less than market, it's a winning formula no matter what. Knowing that your first month and your first year, maybe your first year and a half, are marginal or whatever, no cash flow, but the value you create at the property, not only because of the lower cap rate on sale for value add. I mean, I would love to buy a deal from you, because think about it. It's a fully renovated property, rock solid. Whether you have good notes or not, my due diligence would show me that. And I know the value is, I don't have to spend any money. All I got to do is raise rents, right? And if the market's now at 1,300 and you're at 1,150 or 1,200, that's a very easy thing for me to understand. Is when I walk into 10 properties and I say, okay, 1,300, 1,280, 1,325. You walk into all those properties and you say, wow, look at this. I don't have to do anything. Oh, maybe at that point you have to do new hardware, right? Or lighting package, but very minimal to achieve success, as opposed to something I always talk about. If you need everything to go right, you're more likely to go wrong. If you have to pick one thing to go right, like that, sort of what I did at Toro the other day, I looked at our deals and said, okay, look how many things have to go right here. Look how successful. And if you can mimic that or find your seller, your avatar, you create your perfect seller, then you can start working on something that has higher probabilities. I love that. I think that model is more geared to success than, a syndicator going in, renovating 20% of the units, tight budget, high levered debt. There's so much that can go wrong in that situation, inflation or not. I just think that approach is, yes, I'm in the syndication business. This is what we do, and we raise money and we find good deals, blah, blah, blah. But there's a side of me that says, give me a couple $1 million, any investor listening, give me a call, give me a good investor, and let's go understand that we're going to make no money today, but we're going to set up for great cash flow in the future, because it's very difficult to run a deal perfectly. But if you have margin of error because you've over improved, or you've made it nicer than it should be, or you replaced the roofs and you did the heavy lifting stuff, someone emailed me today about a 60 and he said, hey, what do you think of this? Right? Rents are $200 below market. Broker saying he could, spend $5,000, raise it. I'm like, you're going to spend like $7,000, but forget that. Even if you spend $7,000, 60 units, $200 rent bump, that's a lot of NOI. I said, the deal can fail. You're still going to pick up, maybe you don't pick up 180,000 in NOI, you pick up 90, but that's 90,000 right to the bottom line, right? There's no added expenses with that money. Your expenses are what your expenses are, netting taxes, stuff like that. So I think that if you're okay with whatever that investment's going to cost you to make an extra 90 grand, there's a lot that can go wrong and it still checks off a lot of boxes. So I personally like that approach. I think there's a lot of validity to that. And that's what I'm looking to accomplish right now. I'm not looking to reinvent the wheel and, syndicate 46 deals and raise millions and billions of dollars. Like, that's good. I'm probably good at it. People like me for whatever reason, but I'd much rather buy the one-off deal that is clean, that I can go to bed at night knowing that, look where we're at in the marketplace, right? We're always going to trail. We've over improved it. We've cleaned it. We're good landlords. We're good operators. We answer people. You should have great 24-month plan, as opposed to your first 18 months might be a little rough, but you're going to get there. And I love that approach.
Mm-hmm. No, for sure. And it's even, even that approach too is tough, right? Like, the second deal I bought is totally different. It literally turned a unit and brought it from 700 to $1,000. So it's like, I sit there and look at that. And I'm like, why am I, beating my head against the wall to do all this work and renovate it for a not unsimilar return potentially from the first deal to the second one? And it's just way easier, right? You turn a unit. And, I mean, look, granted, I overpaid for it as is slightly, but the value is there. So did I really? Who knows? But those are the types of ones you step into and you're like, God damn. So, it's like, I sit there and look too. It's like, you talk about the things that have to go right. Like, I'm going to test renovations, but like, talk about a fallback plan, right? Like, hey, renovation only gets you $50 more and you spend 10 grand. Okay. Just stop doing it. You pop, $300, like nothing wrong with that. Now, do you have older stuff that may break in the future and do you replace it so that you, like, again, it's the same conversation, right? Like, what's your future ROI on dollars to spend today? And that's always the balancing act you play. But it's like, those are the types of deals you look at and you're like, why bang your head against a 200 unit when you're going to, spend $8,000 to raise rent $100 and you've got to sell at a sub 5 cap to make a 15% IRR. It's like, okay, that's nice.
Yeah, no, I like that approach. I mean, it's something that just makes sense. It makes sense to me, right? But it also, it comes back, it's that working backwards, right? Are you looking for cash flow right now and upside today? Are you looking to, fix and flip an apartment complex, right? Like, if you think about the concept of fix and flipping an apartment complex, it's fucking mind blowing that that's what is actually happening. But the concept behind that is crazy, right? Fix and flip a house, now multiply it by X 100 units or X 1,000 units, whatever it is. But if you say, okay, I'm going to buy and hold, well, what are you trying to accomplish? Are you looking for a great pop of cash, or are you looking to maintain, a balance? And I think that's where, stacking some deals and going through it, there's something to be said about that, right? And that's, to me right now, cash is king, right? I'll take a 2% cash flow as opposed to a huge 30 IRR in 4 years. I think that cash flow today is super important. And however you achieve that is really the goal I'm trying to put out there, and I'm trying to do it for myself, right? I want to be in that cash flow game, and it doesn't have to be 8, 10, 12%, right? I'll take less, knowing that I'm setting myself up for a really good ending to the story, because I think that's what's important to me.
Yeah, no, I mean, it's tough going back. And when you're talking about, flipping deals too, I've just seen the amount of work that goes into doing some of this stuff. And it's like, I don't know how some, groups with third-party managers come in and just flip stuff and raise rent $300, because there's so much shit that goes into it and so much that can go sideways. I mean, you want to talk about it too. I mean, we've got at least 2 deals, if not more than that, you guys have done and have completed since I've left that had, a ton of problems occur. And I'm sure there's just a million things that you don't even know about and probably don't even want to know about at this point. But it's like, I think we did, and you guys do a better job than most, or a lot. So it scares me sometimes, especially on the smaller stuff too, because it's even less so. The quality of the contractors tends to get worse as you go smaller. The quality of the managers tends to go worse. The ability to get away with stuff goes, so it's like, I just sit there and I'm like, I look at some deals and I'm like, there's no way this was done right. I mean, the first deal I ever offered on down here last year, I mean, I'm so happy we didn't buy that. I mean, I lowballed the shit out of them and probably would do okay, especially considering what's going on. And it's still out there for like double what I offered, which is astronomical, by the way. And I'm like, whoever buys that is just walking into a clusterfuck.
So it's funny, there was 3 deals sent to me today in the mobile home world. One I had under contract in 2018, but we bailed because it was a disaster, borderline dangerous. We had under contract of 115,000 in 2018. They want 650 grand today, and the property's performing significantly worse. Additionally, we had an email sent to us. An owner bought deals in 2018, 2019, and he sent us the closing statements from when he purchased it and the income statements from when he purchased it. He's like, oh, I bought this at a 17 cap and I bought this at a 13 cap. I'll sell it to you at a 17 cap today. And I'm like, so I'm looking at it. I'm like, but you've done nothing, right? All you're doing is lying on everything. It's like, it's a bona fide lie. You're not selling it to me at a 17 cap. You're selling it to me at a 3 cap, but it's a 17 cap to you because you're artificially putting things in place. So I said, listen, I get it. You make it seem like you're giving me such a great deal, but these deals are just dilapidated. They're just never going to work. And to the seller, he thinks he's giving you a bargain at a 17 cap, but to a buyer and an educated buyer, it's like, you want $1.2 million, your deal's worth $750,000. Like, it's worth what you paid for it 3 years ago, but all you did was lower expenses. But you're right. It's in today's world, it probably would have worked out. But at the end of the day, and I can speak from $11 million construction, $5 million construction jobs. Right? You think you have the best contractor, even as good as some of them are, and as bad as some of them are. I don't know half the things that have gone wrong, right? And I think I'm very, I've heard from multiple managers. Ortega Village, our manager said, "You guys are more demanding than any one of my clients. Like you guys are so demanding." And we don't even know what's going on in the day to day. And I talk about it all the time. I said, you want to get into multifamily, get ready to trust people, because, they tell you everything that you want to know, but it's like everything else, right? When you went out drinking when you were 13 years old or 15 years old or 17 years old and you come home and throw up in your mom's face. No, you throw up on the neighbor's bushes, and then you walk into your house and you don't think your mom's going to know or your dad's going to know that tomorrow when they walk outside, there's puke all over the bush, right? Like they know, but you don't, it's something just going unsaid, right? And there's a level of trust that you just got to give, because if you're too in their business, and I don't think you can ever be too in their business, but you got to give them some rope, because if you want them to report every little thing that goes on, there's just not enough time in the day to manage that. Because, you don't need to know that the tenant in unit one of 1,000 is, she's telling you, a whole song and dance, right? That's their job. They have to report to you the major hurdles and criteria and what you're looking to accomplish. But these big projects, man, big deals have gone sideways. Can you imagine, getting a local contractor for a one-off unit? It's got to, especially today, 1 in 4 people make more money on unemployment than they did working. So there's no incentive to go back. I had one of our managers, a great resource of mine, literally say, I have to call you back. I'm in the office. He called me back an hour later when he was in his car. He said, I would never say this in the office, but my maintenance people would make more money if they were unemployed doing odd jobs for, building a deck for a friend, doing some pavers in the backyard, right? If you're a maintenance guy and you have that talent, why do you want to work for an apartment complex making $45,000 a year, right? You could probably get unemployment, make more, and then go do 3 or 4 or 5 odd jobs and get some cash. It's scary to think that, but if something doesn't change, these are the things that are happening. So imagine trying to do a 10-unit building, with Mr. Jones Contracting, who knows, my employees are, 50-50, and then he's got to step in. He can't step in and do 30 jobs. He only can do 1. He's 1 person. So it's scary to think what's actually lingering out there on some of these projects.
No, I mean, we've run into some, some staffing things on a couple of things where the first property going to the repipes, the guy that was doing them all left the company. So now it's like they're trying to find somebody else to step in, and that's annoying because, like, on something like that with such an old property, they're almost like figuring it out because every property is different. So it's like, what was nice was there's 4 buildings, every unit, there's 2 slightly different floor plans, but it was like, okay, they did the first time, then they should know for all the other ones. And now it's the guy that learned it left. So it's like, now they've got to do this discovery again. And I'm sitting here, I'm like, oh, God damn it. Like, why did that have to happen? So it's a little bit annoying where it's like, okay, I was hoping each one would get better. And now we're coming up on the, fourth building. And I'm like, oh, I just hope this goes well. Like, I hope I don't, because like the first one, it was like, I had to get them to redo a bunch of different things. I was like, by the third one, it was pretty good. Didn't have to worry about it as much. And now I'm like, I'm going to have to redo it all again and oversee it or whatever. So it's just, little things like that. And even just, getting some of these units with parts installed, it's just, getting people out there. It's nuts. And I don't know if it's, a straight staffing thing or, a supplier thing or a vendor thing. I think it's more of the staffing thing than anything else, just my gut feeling. But, it's crazy. I mean, when you get money for free, it's nice, right? Like I would make a lot less not working than working and making money. So even if it's comparable, you're like, all right, I'll live a little cheaper and do nothing.
So I will leave, and this could be a good place to wrap up. You tell me, but lumber's gone through the roof, right?
Mhm.
Awesome graphic you put up there, and I think you got it. I don't know who you got it from, but it was, dollar wise, you could build 2.5 houses.
Yeah, I saw that.
What you used to be able to build 10 houses. I've been talking about this like it's my own shit, but I stole it from you, and I think you got it from.
I saw somebody else post it, and it was some
Yeah.
account that did the whole thing. So it's been tossed around though. Like everybody in real estate's picked it up and just fucking ran with it. Who knows if it's even true, by the way? I didn't verify it, but you just hope it's true.
Listen, it's true for the intents and purposes of this conversation.
Sure.
And
it's probably not far off. Let's put it.
No, it's not, because I know the prices have gone up like 600%. But I was having a conversation earlier today, and I questioned everybody to poke the hole in this. Why has wood go up? Why has the price gone up? Is it because they can't get it from the forest to the buyer? Is it because COVID shut down supplies? Is it because we're running out of trees? Why is the price gone up so high? Is it inflation? Why? That's the question I've been asking, because is it you can't find the truck driver to drive the logs to go turn them into 2x4s? Is it the businesses were shut down? Is, like I said, are we running out of trees? Because if you think about the reason why it's happening, you scratch your head and say, okay, well, why is the price going up so much? What's the mechanism behind the price increase? Are more houses being built and it's just a supply and demand thing? I'm not saying it's good, bad, or indifferent, but with everything that's happening, what's the mechanism to cause the uptick, right? Is it the supply chain? Is it the gas line that's down, that the gas line, now there's no gas anywhere, you can't drive anywhere. Like, what are the reasons for the cost? Then the question here is, how does it get better? Because if it's not going to get better, well, then I'm a buyer of existing inventory, because existing inventory will go up. If it's going to get better, well, then I'm a buyer of buildable lots, because my prices are going to come down, so I can pay more. So good, bad, or indifferent, I would love to hear opinions on it, because if you think about it, why would the price go up so high without a running out of trees, right? That's not the answer.
Yeah.
So the question is people just don't want to work and cut the trees down, so they have to pay more money to the people doing that, or they have to pay more money to the drivers. So it's just a very interesting conceptual thing out there, but I think that will open up doors, if you believe on one side or the other on where you fall.
Yeah, I have no idea. I've got a million other things to worry about than trying to figure that out, where it's like, even just going back to the retail, it's like I would love to start learning about retail, but it's like, I've just got 40 other things on my plate I'm trying to do, least of which is trying to get the website finalized and this finalized and like that done. And it's just like little stuff I'd love to just be done with, and hopefully I will soon. But yeah, it's like, and then where do you focus your efforts? So no, I think, I wish I understood why, and I don't think anybody does. I'm sure it's more than one thing for sure, but
yes,
no, I mean, that's, that's where we're talking about, rising prices and inflation. You look at it and you're like, okay, well, the other thing we always used to talk about was replacement costs, right? Like buying something below replacement cost. Well, fucking replacement costs just went up fucking 50%, 20%, whatever it is. So it's like, okay, well, are you okay with paying 20% more because of that? I don't know, but it is interesting, right? Now everything's more.
It's funny. I was talking to a broker today. The cost to build something in Jacksonville 3 years ago, $180 a door, give or take. 2010 product on the market now, $265 a door. that's literally like a 60% increase, 3 years. What would it cost to build that product? $260,000 probably. The cost has gone up so much. You're right. What's below replacement cost now, right? We used to buy deals at 30 a door. I dare someone to send me a deal at 30 a door. I probably won't even underwrite it. I'll just buy it.
Well, no, but remember, so we bought Ortega for 47. You forwarded me a deal in like the worst part of Jacksonville, low income housing tax credit deal at like 47, 48 a door. And I was like, that's just crazy. I mean, it's not so crazy because it was just cap rates and rents and all that stuff, but it's just, sometimes I wonder, like, do we just know too much, and that we almost don't have that little bit of like, hey, we used to know where it was and now we know where it's going. And we used to have that conversation with, Lisa too, where she was like, don't buy anything for over 30 a door. And it's like, if you had bought everything at 30 a door, we wouldn't be having this conversation. We'd both be on a beach somewhere and being like, yeah, fuck it. We're good. So, sometimes it's almost like, do you know too much?
Listen, there's something to be said about knowing too much, right? It shades what you didn't know before, right? The balls or the go get 'em attitude that you have or had. If you know what you know today, would you have bought that deal 5 years ago? Or vice versa.
The answer is literally yes to every single deal.
Yes. Now the question is, if you didn't know what you know today, would you be buying the deal that was presented to you? And the answer is probably yes, right? If you wanted to be in Jacksonville, for argument's sake, and you did not know what we knew or what we know, you may think 130 a door is a good buy. But that deal 3 years ago sold for 60. Mm-hmm. And is it worth that much more? I don't know. I'm not going to do that good or not, but I agree with you. Are you too familiar with the situation where you have to sort of take that perspective out of the underwriting and see if you would go about the deal? Because, there are deals that, there was a deal that we just, it's going to market at 120, right? I was at 115 and I was confident. I liked it. Mm-hmm. And, it's not going to sell for 120 a door. It probably sells for 130 a door. But, at 115, it looked decent. Now, the market's got its hands on it.
Should just start flipping deals, do nothing, start underwriting deals 50 basis points lower in 6 months, flip deals for $5 a door. You'd be golden.
Exactly. Just holding costs 6 months and then flip it for 20% more. There's a deal in Jacksonville that we could have bought at 6.5. It's under contract at 8.9 3 months ago. So
interesting. Awesome. All right. Well, I do think that's a great place to wrap up. I think we talked about a lot of interesting stuff. I don't know if we gave people answers or not, but I'm sure we at least gave people a lot of stuff to think about. So pleasure as always. This was fun, and stay tuned. If you guys aren't subscribed, do it. If you are, send it to somebody who would get it. I've never said this before, but leave us a review too. 5 stars if you like it, 3 stars if you don't. We don't do 1-star reviews. But yeah, no, it was good. Hope you guys like it as well.